Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, December 2nd, 2019. I'm going to keep this one limited to members of the site because I want to cover a few more things in addition to the markets. I did a midday update, and really not a lot has changed. Really nothing's changed since the last update. And I posted static charts. Again, if you didn't catch the video earlier today or the post, we've had technical issues with the site. I want to say, well, I can't say they're fully resolved. There was my web hosting company said there was an issue with the server earlier today, and then it turns out they also think there might be an issue, just some software conflicts on the site that are making things run sluggish, and then if the resources spike out, then the site will go down. So I'm working hard, be working with developers to get that ironed out, hopefully by tomorrow. But again, I'll post any relevant updates as quick as I can, and if I need to, I'll just shoot out an email from that MailChimp service where you get the email updates on the front page post. Even if the site's down, I can send one out that way. So I'll try to communicate any thoughts there. Again, to subscribers, if you are, as you should be, signed up to the premium email notifications. That's every time a new post is published on the front page. Subscribers should get an email of that post. So if you're on that list, if you're not, just drop me a line. Support at rightsideofthechart.com. We'll make sure to get you back on that list. All right, so let's talk about what happened today in the markets. Again, we're seeing volatility finally perk up a little bit with a we closed down about 1%. There it is, 1.02% on QQQ. And again, the last update, I posted some static charts on the homepage. You should have had an email on that. Keep in mind when you get the front page post, if they're in a gallery format, in other words, if there's two or more charts together, they will not show on the email updates. You'll have to come in. That's just too much to pack in there. So like on that one that went out today, you're going to see the single chart below of what a bear flag pattern looks like, and then you just visit the site and you'll get the charts where you can click and expand and zoom. I turned that feature back on. So there it is. That's let's keep it simple. These are potential bear flag patterns, and I like to emphasize the word potential. Any setup, think of it like a trade setup. In effect, it is. I told you how you could trade it today. And so you have three components: the flagpole, which is an impulsive move down, followed by a period of consolidation, and ideally, one of the criteria, I think a lot of people sometimes, if you're new to trading, you may recognize a pattern, but if you read up on patterns, if you want to put the odds in your favor of that pattern playing out, if you plan to take it, you want to look at any other criteria in the volume, such as in the pattern, such as volume. So if we drill down here on a 1-minute chart, you can see, probably shows a little bit better on the futures, but you had an impulsive move down. Let me try to find the right chart for you. Yeah, this one will work. I flipped over to a 15-minute time frame, and so one of the criteria you want to see ideally on a bear flag pattern, or a bull flag pattern for that matter, that's just in reverse if you have a sharp move up, is an impulsive leg down, and that's obviously impulsive selling. Big red candles, a quick drop, that's impulsive selling right there, followed by, and you want to see that on a pretty high volume, followed by a move up that takes the form of a flag, so an upward drift but on declining volume. And so it meets that criteria, and the only thing we need now, of course, would be a breakdown. Now, I'll say this. It's getting a little long in the tooth. You could extend a little more, but ideally, just to keep the symmetry intact. In other words, you look at the distance of the flagpole and the length of the flag relative to the distance of the flagpole. It should break out soon, and that would probably mean a gap down tomorrow, or maybe an open up right there and then start to move down early in the session. That would be ideal. Again, this is as of today's close right here. So that's it. Potential flags. I give you the measured target, which is simply you take the the distance of the flagpole there, and you add it to you go right there, and you add it to the highest part of the flag before it breaks down. And so again, just a potential flag. Flags, bear flags, or potential flags within a bullish trend, which we're still in, keep that in mind, have a higher rate of failing because the trend is bullish, and buyers have been stepping in lately and buying these dips aggressively. They didn't buy this one up very aggressively today. That's why, in other words, we still closed down 1%, so it's still the biggest drop we've had in a while, which is a little bit of a tell. I try not to read too much in any one day's action. You're not going to get ramped up and saying, oh, the dip buyers are gone. There weren't, they did buy the dip up, and we didn't get a late day dump. I was watching for that to see if we'd get a late day rally. That would have been pretty bullish if they would have really ramped it up in the close, or late day drop. But again, I try not to read too much in any one intraday move in the markets, or had we gotten a late day ramp or a late day sell-off, it wouldn't be a sure thing that we're going to drop tomorrow if they sold it into the close, or a sure thing that we're going to go up if they ramped it into the close. But let's just leave it here. That's where we close, so that's what I'm looking for tomorrow. And nothing is more impulsive than a gap down should we get that. So if you're looking at the flag pattern, should QQQ gap down to, let's say, halfway down below that measured target, that would be impulsive. You're not going to see a red candlestick there because there's a gap, but again, nothing's more impulsive than a gap. It's more impulsive even than a swoon down like that. And so that's it. I don't want to read too much into them anymore until we'll have to wait and see what happens tomorrow. You can of course watch the futures overnight. Investing.com, TD Ameritrade's Thinkorswim platform, which I guess soon will be Schwab, that they have real-time futures quotes and charts as well. And there's the flag. That's a wonky little candle. This is showing after-hour trades, but that one didn't even take place yet. Right there, that's a funky candle in SPY. So that's what I call. See, you can see it in the after-hour session. Sometimes you get these quirky little moves up, whether somebody really had a buy order right there by mistake, and you can see. So disregard these two long spikes right there. So I just wanted to point that out. If you're looking at this chart now, you see that big spike. This is where SPY is, right at the bottom of the flag right now. That's where we close the day. And that's it. And remember, in the larger context of thing, like I said, this is today was an additional check mark. I'm getting more and more check marks. Very strong trends. So you want to give the benefit of the doubt. But I gave you guys my preferred trading strategy in the update today that I made, and that was to, and that's just me. Doesn't have to be everybody. That was to short at the top of the flag here earlier today, a half position. Adding to that, if and when we get that breakdown below the flag, I use NQ, or at least in the count that I did it today. Sometimes I'll use QQQ if it's IRAs, other counts, but that's what I'll add. So I'll look into adding there. And if you want to look at NQ and see what it looks like, this is longer term. That shows the primary trend line there that was broken, but I'm going to zoom in a little bit and take a look at the flag on NQ if you're a futures trader. And so you can see, the divergence is right here. One thing that stood out, these again, I took those screenshots this morning. That's when the site started crashing, so I couldn't post anything. But you had some pretty steep divergences. Remember, I've talked about these divergences for weeks now. We've been diverging. They've been in place. Here's a divergence line down here that started all the way back here. We really started diverging back in late October. But you can see the divergence have really steepened here. You can see the divergence lines steepening out. The prices have flattened out, and again an impulsive move down. But if I zoom in here real closely, you have to zoom in tight on the futures. There you can see there's your flagpole, impulsive move down. There's your potential flag. I can add some lines there, and that's what you want to watch to see if that breaks down overnight. And if so, you can add on a impulsive breakdown. You can wait to get a close, or take out these recent lows. There's a lot of ways to do it, and based on everything on the daily charts, as I've talked about, my preference for the time being, if it does break down and I add a second lot of shorts, it would be to just trail those down for the time being. See what happens, unfolds over the next day or two. Why don't I want to cover, or right now, why wouldn't I want to cover that 8,200 level where we'll likely get a bounce? 8,200 is this level right here, that yellow line I've been talking about for many weeks, saying we need to break that, I believe, to really open the door some more selling. Well, a lot has to do. There's a lot of factors other than the longer term charts, as I talked about earlier today, but things such as the VIX too, finally taking off. VIX up 13.5% today, pretty much exploding off that support zone right there, where these other corrections have started from before. And as you can see, you look at this green candle here that we had today on the VIX, again recently coming off the lows, and that's indicative or similar to these other big green candles that really started the correction. Yeah, that one didn't go so far, so it's not 100%, but again, I pointed that out today. We weren't at the support zone there, so let's not even count this one. The way I like to use the VIX in my trading in investing is a lot like sentiment surveys. When you have when you have extreme bullish or extreme bearish readings, that's when I take note. Anything in between extreme readings, I find sentiment or the VIX pretty much useless. I find very little value. So it's those extremes, and so when you come down to the bottom of that low, that's when I want to take note, not the big moves in between. It's just too hard to chart. So and this is again why I'm more apt. We've had this extreme low volatility, an extreme shift relatively quick from a lot of pessimism in the market and in the economy, if we're heading into recession or not, to all of a sudden, wow, U.S. is strong. We've had some pretty solid economic reports come in lately, and I think the shift has been pretty strong. So it sets the stage anyway for a quick move up, because I think it's safe to say a lot of shorts. I'll have to check short interest. I haven't checked the latest reading, but I've traded long enough to kind of have a good feel of when the shorts have kind of given up and a lot of them have been squeezed out. And I think it's safe to say after the rally that we've just had recently, there's been quite a bit of short covering. So you probably have very low short interest, and that also sets the stage for maybe a quick move down that could just blow right past those near-term targets. That's kind of where I'm going here. So there's that would be a back test of that level there, about 195.37, or the downtrend line on QQQ. If we look at the 60-minute chart, I have this target zone right here I've had for a while. Let me make that a little more clear for you guys if you're coming in new to my analysis. This is the last couple weeks I've had this target zone here, we'll call it about 135, 190, 194 up to about 196 almost. And that would be, and it still is, a near-term pullback target zone, but again, there could be the potential for more. We could go on down through that. So let's just take it one day at a time. We'll see what happens tomorrow. All right, let's roll in and look at a couple commodities, and we'll wrap this up. In the last update on, was this Friday, I believe? No, I'm sorry. Of course, I wasn't around Friday. That would have been Wednesday, day before Thanksgiving. I updated natural gas. The update on that was natural gas has potential positive or bullish divergences building on the PPO and RSI, although it just recently broke below this big old, I think it was a big level, 2.556 support level, and was then rejected off. A recovery of that level next week, meaning this week, could trigger the next wave of buying, although that level now remains resistance until and unless taken out. So that's what I'd like to say. And that was then. Let's find the updated chart of NG. I know a lot of people like to trade it. So here's where we were. We had just back tested and failed at 2.556. And we've failed to take it out, and then boom. So no buy signals on natural gas. It remains in a downtrend. I don't see a lot in this chart I like right now. I don't care to short it here. I just stand aside. I like to wait for the higher probability setups. There's a potential downtrend line you can see. That's the only thing I've added to this chart since that last update on Wednesday. So let's move on. Yeah, I don't see a lot now, so I'm probably not going to do frequent updates. If you're a member, obviously you want to bump on it a day or two, just add a comment under this post or ask me about natural gas. I'll give you my thoughts, but right now I could flip a coin as to whether the next 3-5% is up or down. I don't have a strong opinion on natural gas. All right, so that was UGAS. It's the same thing there. CL, Crude, there's on Wednesday I posted this chart saying it's been in this trading range, and a solid break below 57.50 would likely bring Crude down for another test of the uptrend line. And that was why, I'm not, I could have said it would have break above here, would have been bullish, and it would have, but what I had here is we had negative divergence, so that was kind of the scenario I was leaning towards, and that's what I'll be watching for. I didn't take it today, and that breakdown might have come Friday. I don't even know I was out. Again, today was playing catch up, plus dealing with all the technical glitches on the site. But let me show you an updated chart here, if I can find it, and it's right here. And there it is, boom. And that's that's how support often works, and that's a pretty impulsive move. Let's see, once we took out that 57.50 level, boom. And then there's two things to that. So that's number one. That's, technical analysis. Support broken. The seller stepped in. Longs got out, shorts got in, whatever, or a combination of both. And then, I had first support level below was at 5607, a pretty decent level too, and uptrend line support. So I had intersecting support levels, again shown by that, the scenarios last week. Here, let me go back to that. That's where I had us going. And what we did there is we had what I like to call a momentum fueled overshoot. This is a vertical plunge. Straight down, you have a lot of velocity, a lot of momentum, and so you tend to overshoot the actual support level that the buyers will likely step in, that security will likely have a reaction on. Now, doesn't mean we have to bounce much from there, but we did. We overshot it a bit, came up, overshot it to the upside, so we had a little bounce, and this is what I call a reaction. I define a reaction as a bounce and or consolidation on or around a support level or resistance level if you're coming in from above, and that's exactly what happened. Look where we parked. We parked at, these are futures, so they're still trading, but we're right around there. You can see that 56 level, give or take, right on the trend line. And where it goes from here, I have to say I'm leaning towards a breakdown. Now, I don't have enough confidence to short it, but if you are short or you plan to, I'll give you the levels. Now, I can also say this: if I know the Saudis want nothing more than a prop crude up, they're trying to push OPEC to continue to extend the production cuts so they can help their big IPO. And so maybe they can manipulate it higher. But I would look for a move down here. My guess is we're probably going to come on down here to about that 53.62. I don't have a strong enough conviction to short it, and maybe I would if I, again, wasn't focused on working on some other issues on the site. I said I'd probably get back to trading this week after pretty much taking last week off, but I'm going to focus on some other things, get everything working here. But I'm just showing you levels. So if you did short it, stop over the recent highs. Likewise, you can go long. I always say this: a pullback to support is an objective level to go long. Support is support till unless broken. So you're at intersecting support levels, as I just said. Price support plus uptrend line support, and so you can go long with a stop maybe just below the recent low right here, this spike low, and try to swing crude back up to any of those levels, and if it gets up there, it may break out. One thing I can tell you, it's in an uptrend. When you look at it this way, here's your price channel right here, pretty much. It's zigzagging, stair-stepping higher. So glass half empty, glass half full, trade as you want. If I had a strong conviction as to which way it'd break, if I had a strong conviction it was going up, I would probably go long right now, or maybe add it as a long trade idea. And if I had a strong conviction it would go down. Like I said, I'm leaning that way, not just based on what I see here on the charts on crude, but also everything I just told you about the stock market. Crude is highly correlated with the stock market. Make no mistake about it. It is not random coincidence that this low right here where this uptrend started was October 3rd, as was the stock market low right here, October 3rd in ES, and SPY and QQQ, same difference. So they are highly correlated, because if the stock market is going up, that is implying people believe the economy is strong, growth will be strong, corporate earnings will be strong. Therefore, consumers and businesses will spend more. There are going to be more fleet vehicles on the road, more trucks, trains, airplanes, all that flying around, burning fuel. And so that's why you'll see, sometimes more than others, a very high correlation between crude oil and the stock market. And right now that correlation's on. Again, it is sometimes an on-off thing, but it's on right now, and therefore, again, that plays into my expectation that should the stock market break down below these flags and have another 3% or more possibly downside, then crude's likely going to go down as well. Okay, and then finally on that post on Wednesday as well, I showed you this was a daily chart of USO. If you're an ETN trader, USO, this again Wednesday's chart, has been working its way up this 60-minute price channel, building with negative divergences building. As I said, should the divergences play out for a pullback next week, the lower trend line, quote unquote, should act as support, although a solid break below would likely open the door to additional selling. So that was again Wednesday. Pretty much had us, even if we went up, hit the top of the channel, or just go down from there. And let's pull up the USO 60-minute chart. And there it was. So we never even made that final thrust. We went down from there, just like crude futures, slight momentum fueled overshoot, pretty much dancing around the channel now, a hair below it, really not close enough to say you've clearly taken it out, but again, that's where I think it's going. So just like I showed you, CL a little more downside. I'd have to align that. It's probably about right here. I think this level here, about 1136 or so, would roughly, let me get rid of this line so it's not so busy here. That would probably be aligned with that crude target. I'd have to double check the charts, but that's my preference. And it could be quite a bit more. You know, break down this price channel, that's going to be pretty bearish. And it's these divergences and what the posture of the stock market that tells me that's the most likely scenario. So if you are long crude, maybe a good time to just set a stop somewhat below, not too far below today's lows. That way, if it can regain and work its way back up within this channel and the uptrend continues, great, and you don't lose too much more. Otherwise, if you want to short it, or you did short it today, stop not too far above today's highs. And like I said, I'd be more apt to let it run than to try to game those quick little 1-2% pullbacks. I think a lot of ingredients are in place for a much bigger drop than most expect right now, especially considering how bullish everybody was going into this week. And so there could be more downside to come. Okay, that's it, guys. I didn't want to cover a ton of things. I should make mention that what was that? One of our long trades is panning out. Actually, I had a good day today, despite the market being down. Broke out last week, I think it was. PBYI right here broke above that $9 level, triggering a long entry, and a nice lift today, about a 13% gain coming up to T1. I will leave it on as an active trade, but I will say this: I may pull that trade early if this target happens to get hit tomorrow or early this week, and the stock market I continue to see more check marks for the bearish case. Then I'll probably pull this one in, because I would expect this rally will likely be foiled before it gets up there to that second and final target. So let you guys decide if you're in it, how to trade it, but I'll post an update. I have a price alert set if that first target is hit, and again, that's might just close that trade out officially if that target is hit in the next couple days here. All right, that's about it. There may be some other things, and I will work tonight and try to highlight anything in the individual stocks, any other commodities, precious metals, anything I didn't update now that stands out. I'll get to that as soon as possible. And again, thanks for your patience on the tech issues. Really don't get that anything like this. Haven't seen the site down for more than maybe 20 minutes in the 8-year history of running the site. So this is a little bit unusual. So please bear with me. Thank you very much.